All right, morning everybody. It's the 5th of June. It's Non-Farm Friday. We're Signal Centre talking ball. Joe Neighbour, Ian Coleman and Steve O'Hare. Morning, gents.
Good
Morning, all.
morning.
All good?
Yeah, not bad.
Not bad.
Just before you
Friday.
come on, Steve, me and Ian were feeling a bit perplexed.
Huh?
Feeling a bit
On the
perplexed.
markets.
Oh, what's going on then?
Crazy, isn't it?
It is. It's a bit
One-way
mad.
traffic.
Yeah.
And you know, it's sort of, I guess, the part of the reason for feeling a little bit sort of confused is that we had this huge stimulus package from Europe yesterday, and the euro went mental on the upside. So what should have been, diluting the currency sent it much higher,
Yeah.
which is a bit strange.
Yeah. Oh, well, I think there was a concern that they might not do it, and then that would have been negative for euro probably as well.
Right.
You know what I mean? I think if they're not going to stick to what they've said, it will lose its credibility. Maybe.
Quite possibly.
There's obviously, with the UK leaving, there's it's creaking at the seams, the whole system. So maybe it's a little bit to do with that.
Yeah. So just for those that didn't see it, the ECB yesterday increased its PEPP bond buying program by a further 600 billion euros, and that's now at 1.35 trillion overall. Initially, there was some choppy euro trading, but then the single currency gained sharply to 11-week highs above 1.1350 for euro dollar, with monetary and fiscal support. So yeah, massive moves, and of course equities joined in too. I mean, not straight away, but looking at it this morning, they're all off to the races again. I'll just share the screen just so you can have a look. This is the DAX. Through that 78.6% retracement now. This is a daily chart from this big, obviously, crash off of the COVID move, and then this huge V-shaped recovery. And it's been pretty parabolic, really, in the last couple of weeks. It's been absolutely no corrections or drops at all in that period. And it's difficult to chase that, I think, at this point. I can't see many people that would want to buy here without any kind of correction, but at the same time you can't really short it as well because it's just complete one way.
Directional trade, isn't it? It's they're talking. I saw on that Bloomberg email again this morning that Trump insiders are saying that Trump's going to chuck another $1 trillion at it. So that'll give it a bit more of a boost again.
Well, this is
stocks.
The Nasdaq I've got on the screen now. This is a daily chart again, and that pretty much hit all-time highs yesterday. And Trump wants to chuck $1 trillion on top of it now.
Yeah.
Where does it go if it goes down again? Is this the new norm? Just keep pumping.
Just
more
keep
money?
on. Just get a bit more back pocket.
That channel there, or that wedge that's formed, is fairly tight in its ranges, and it's just been relentless. Really, you can see those long wicked candles every time. Bang, the buyers are in, sending it straight back up again. Fun and games, eh?
Yeah.
If you do get a break, it'll probably be quite impulsive out of that because it's quite a steep wedge, isn't it?
You would have thought so, wouldn't you?
But God, I mean, is it going to be today? Christ knows.
There's got to be a lot of fatigue in there as well for people short selling it all the way up, and
be a nice double top, wouldn't it?
Huge double top. So if it breaks down there, then you're in all sorts of bother. Anything on the currency front or the commodities front that you guys are looking at?
I thought cable was quite interesting.
I'll share the screen. There you
go. Fibs are always subjective, aren't they? So is this a 261.8%, or do we go like that and just say, it's got a bit further to go? But I think what is interesting is the daily chart. Something that we learned, I think, a few years ago from Mr. Lambert, called the rule of 9. It basically dictates that after 9 candle moves in either direction, you get a correction, and we've had 1, 2, 3, 4, 5, 6, 7. So a couple of more days to the upside, perhaps for cable. I actually thought that was
up there as well, wouldn't it?
It's a what?
That'd be a serious extension up there if it had, in the next 2 days, hit up to that 22 261.8 level.
Yeah. I mean, this is in 5 waves, isn't it? 1, 2, 3, 4, 5. I mean, that hit 261.8% pretty well. Then a 3-wave correction, then maybe another 5 up. I mean, is that 78.6%? It probably lines up. Let's get 78 on. Bang on the money, isn't it? So you've got a confluence area here, 78.6 and 261.8.
Interesting.
Especially with euro sterling looking like it's heading a bit lower today. You got that head and shoulders formation that you were talking about. Whoop.
Yeah, nailed it, didn't it? I got stopped out yesterday because I had a trading stop on it on a sort of bit of a reaction back, but still profitable. But obviously could have been a lot more if I'd held on to it. But
Yeah,
conditions are choppy at the minute, so yeah, struggling. Steve, you got anything?
I just wanted to sort of show euro yen really. This is on a weekly chart.
it's a monster, isn't it?
Yeah, it's a fairly. I mean, obviously you can have a sort of trend line, a potential trend line as well. It's gone through, but I like to sort of link more than sort of like 3. Obviously, is a trend line. You got the 1 point here. It's spiked through there, hasn't closed above it, so could count that. And this one here, yeah, and it's lining up actually, or it's targeting, I think, the 50% retracement, which if you look at this 50% level here, or even the sort of like where you've had confluence or trade happening historically, but then if you go right back to here as well, you can see all the way along it's quite a decent pivotal level. This like the swing low here is I've drawn it from, and that coincides with a 50% retracement. So there's you can see the work that goes on around this level. Broke through support, rallied back above it, came back down, retested it, and then moved down. Clean break through here, went straight up. Again, spike down, spike down, spike down. So the 126 level is will be the first sort of like resistance we see, I think, for this. And obviously from a daily perspective, you're as you say, you got the 1, 2, 3, 4, 5, 6, 7, 8, 8th day today. So breaking out of that channel, it's seen a nice little move to the upside. The euro sterling sort of had a little bit of a sell-off in the last hour. I'm looking to buy a dip in this. I think we're sort of the nice little supportive area around here. Yesterday I was thinking euros outperforming sterling, and yesterday they didn't really move. It was more the dollar weakness. So this is what I'm. That's really the only ones. And again, as I mentioned yesterday, FTSE's the poor brother. Doesn't seem to be sort of like getting close to the 78.6. Never mind the highs. It is, we've just got through the 50% fib retracement. I'm not so convinced on FTSE. I think that's been the sensible one, whether it's because of the Brexit or not, I don't know. Volatility still sort of heading lower. Obviously, dollar index. There we go. Look, that's what we put that arrow on the chart way back on the 18th of May. It was so obvious. I think if you look, it was mainly this big bearish engulfing candle. We probably put that arrow on when it broke below here and broke below the cloud. But since then it's sort of been a nice one-way move. I don't think the dollar's finished by any means, but it's definitely hurting.
I mean, looking at the fibs, I just grabbed the screen. This is the dollar index. It's bang on that 78.6% on the daily chart, and found some support at 96.43.
Yeah.
Trade of the day.
Yeah, quite possibly. I am struggling a bit, to be honest, to find anything that I like, so it may actually be trying to get my fingers dirty again, picking dollar index off the floor.
Oh dear.
Okay, so gun to the head trades yesterday. Let's just gloss over that. I had a stop out on sterling yen. That little head and shoulders pattern that we talked about yesterday didn't play out. It did initially, but then just got absolutely wiped on the move higher. Copper was stopped out as well. DAX, yeah, pretty good entry on that by the looks of things, Ian, because you managed to hold on to some gains at the end of the day on that.
God, that's amazing. I thought I got stopped on that.
So all in all, not great, and overall we are still in this drawdown phase, and just shows what the markets are like at the minute. I think those sort of follow through. A lot of technicals are just not working, and that's just, markets go through phases like that. So we just got to keep plugging away, keep disciplined, and I'm sure things will get back on track at some stage.
Well, maybe not the technicals, not necessarily maybe working, but we're just not working. Our interpretation of the technicals. Well, I mean, this is the thing. I think you sort of seen the downturns. Does that coincide with dollar weakness?
Yeah, probably.
So we've sort of like, when you get used to sort of like a move, the sort of strength of the dollar that we've had, you start to look at the technicals and try.
Biases that are causing the issues, do you think?
Maybe, potentially that. I mean, and sort of you have a few losers. Sometimes you sort of try and hit the ball out of the park and try and go for the sort of 6, 7, 8 to 1 winners, and that's not working. But even sort of, I know I've been sort of like doing 2, 3 to 1 shots, and they're not coming in. So, but they're quite heavily dollar based. And I'm sort of like trying to go against the sort of like would you call it short term trend at the moment in probably copper? It's sort of, the dollars sort of seems to be taking it up, or recovery seems to be. We're not accepting recovery. Maybe that's what it is.
Yeah. Quite
and we're sort of like looking for this swing back, this doomsday scenario where the sort of like the stocks have been pumped, and we're looking for the dump, and it's we've just got to be a lot more patient with it, and it's never too high to buy.
No, indeed. That said, I'm going to sell it. I'm only joking. I haven't actually found anything yet. So if either of you two have got an idea that you want to share, then please.
I'm just going to go for that euro sterling call.
There you go.
I've already set it up. I think 89.54. The measured move target's down here, 86.66. Staying away from the dollar. Stop at 90.07. So above the swing high.
I'm going to have a look at euro as well. Euro CAD is something I had a look at yesterday, which this is the hourly chart. Had a nice swing back higher towards the 78.6% level and has stalled. It did make a push above for a new high this morning. That's just been completely engulfed by that turnaround candle there over the last hour. So I'm going to try and jump on that and sell it now at 152.84. Stop above that reaction candle there, that reversal candle. So we're going at 53.49 and going to target a move down to the lows on the 4th, so yesterday, at 150.115.
Good luck. Got to be in it to win it.
2.6R if that comes in.
I got non-farm payroll to really smash our trades up.
Yes. Non-farms. What you got, Steve?
Well, FTSE, like all indices, I'm looking at buying dips really. So I'm sort of considering maybe the non-farm payroll figure out of all the indices. The FTSE is the most underperforming one. So I'm going to go look for I'm looking for a pullback to around about 6,300 in FTSE. It's trading 64.23 at the moment. So I'm happy to, as a gun to the head challenge, I've got to make a trade. This is the only one that I see any type of weakness in. So I'm going to go with selling FTSE. Completely against the trend. Don't copy this trade. That's my disclaimer. Just broken
got to be in it to win it phrase. That's going to be don't copy.
I'm not telling you.
It's going to be a winner.
I'm not telling you exactly what I've got to say at the end.
The logic
Duck goose.
You're thinking that it's been the weakest of the markets, and then looking to sell that. I think.
Yeah, just basically just a poor, maybe a poor reaction from the non-farm payroll, because I think just from a risk reward perspective, it's very difficult to sort of like buy at these elevated levels in the stocks. But that's sort of like my mentality towards it. So I'm going to look for a move back. Here we go. A move back to 63.02. So you'll take profit on that and then get long on this trade, and then it'll go to the moon. That's the idea.
Top and tail it.
Yeah, I'm absolutely going to smash it to pieces. Okay. So 64.22, and I'm going to have a stop at 64. Wait for it. 32. No, that'd be stupid. 52. That should result in a 4
look at that.
4 to 1.
Lovely.
Good luck with that.
Yeah, right.
No, seriously. Come down.
Thanks.
Sterling up, FTSE down, isn't it? Normally.
Yeah. Well, yeah, more the sort of like the dollar, isn't it? Sort of like if sterling's up against the dollar's weaker. So weaker dollar, weaker FTSE. So actually, that's why it has been struggling, because there was obviously quite a lot of dollar-denominated stocks in there. So that's why it's sort of like weaker dollar, less profits for the big banks. There's no big banks anymore. They pretend they look big, but they're overinflated.
Pretty lumpy, aren't they?
Well, I mean, their balance sheets are pretty lumpy.
Yeah, definitely. Okay, so there's 3 trades for you today. So in terms of news out yesterday, is there anything that caught your eye? Obviously the employment rate.
Apart from the ECB stuff, no.
US employment report is due later today. Expectations of a decline in non-farm payrolls to around about 7.8 million. Is that what you're seeing on your screens?
Yeah, well? Between 8 and 9.
It's quite a range, isn't it?
Well, it can be though, can't it?
German factory orders declined 25.8% for April compared to an expectation of minus 19.7%. So that didn't really impact things at all.
I think the unemployment rate might be a bit more important than the print today. They're talking at 19.8%, aren't they?
So how many jobs we lost since this started? 40 million, is it, in America?
I think it was about 40 million, yeah.
So we gained 10 million from 2010 to 2020, gained 10 million jobs, and we've lost 40 million in about 10 weeks.
And the stock market's at all-time highs.
Yeah. Something doesn't compute.
So non-farms at 1:30 today. We're going to live stream that, guys?
Yeah, let's have it. Let's have it.
It's on open, so might as well.
Yeah.
So we just do a little 5-10 minute show, 5 minutes before, 5 minutes after non-farms, just see what the reactions are. Chat about a couple of markets and where the movements are, if there's going to be any at all. So I'll send out the links onto our Telegram channels and on Twitter beforehand. So if you want to join us, feel free to do so.
Lovely.
And we'll have a bit of fun on a Friday afternoon, hopefully.
Fun time Friday.
Indeed. All right, guys, let's wrap it up now then, and we'll be back in a couple of hours.
Yep, have a good one.
Cheers.
See you in a bit.